Okay, so what is going on with the market right now? It's like it's sending two completely different signals at the same time. You've got this explosive tech-driven boom on one side, and then this really stark warning from one of the world's most important financial institutions on the other. Let's break down this fascinating contradiction. So picture this. It's November 26th, 2025. The financial world is basically split in two. Over in the US, you've got Dell posting these incredible numbers, just pouring fuel on the stock market fire. But then you look across the Atlantic, and the European Central Bank is waving these huge red flags, saying, hey, wait a minute, there are some serious cracks in the foundation of this whole rally. All right, first up, let's talk about the boom. And honestly, there's no better example of this AI gold rush than what's happening with Dell Technologies. And we're not just talking hype here, okay? Dell dropped some hard numbers that prove this AI spending spree is the real deal. Get this, Dell reported a staggering $30 billion in AI server orders just this year. That's a massive, massive number. And it's real, concrete proof that companies aren't just talking about AI anymore. They are pouring huge amounts of cash into building out the hardware to make it all happen. And of course, all that demand, it has a direct impact right on the bottom line. Because of those AI server sales, Dell went and sharply raised its sales forecast for the whole year. That's them signaling that this incredible momentum isn't stopping anytime soon. Now, what's really interesting here is the sheer confidence this shows from the analysts. After the news broke, big firms like UBS jacked up their price target to $167. That's a potential upside of over 30%. The market is basically screaming, yes, we love this, and rewarding Dell for being right at the center of the AI revolution. Okay, so that's the good news. But on the very same day Dell was popping champagne, the European Central Bank, the ECB, released its big financial stability review. And let me tell you, the tone could not have been more different. It was this super clear-eyed, really cautious look at the entire global financial system. And in that report, the ECB came right out and said it. They warned that financial markets are vulnerable to, and I'm quoting here, sharp adjustments. Why? Because of persistently high valuations and increasing equity market concentration. They're basically saying that the foundation of this whole party might not be nearly as solid as it looks. And this slide just lays out the specific dangers they flagged. They're worried about stocks being way too expensive. That's the valuation risk. They're seriously concerned about the market's structure, how everything is piled into just a few big stocks. And they're pointing to other huge issues lurking in the background, like government debt, that could make a bad situation even worse. So this brings up a really crucial question. What in the world is this equity market concentration risk that the ECB is so worried about? It's a term you're probably hearing more and more, and you really need to understand it to get why the market is so fragile right now. Okay, simply put, imagine the entire stock market is a Jenga tower. Concentration risk is when we've pulled out almost all the blocks except for a few giant ones at the top, holding the whole thing up. The health of the entire market becomes dangerously dependent on just a handful of superstar companies. So you have to ask, what happens if just one of them stumbles? The whole tower could come crashing down. All right, let's dig into how this all feeds into the central paradox of today's market. Because right now, the logic driving investors seems completely backward. And it's the key to understanding why you can have this massive boom and this scary warning happening at the exact same time. You've probably heard this phrase, bad news is good news. Well, right now, that's exactly how investors are thinking. It's a weird logic loop. Weak economic data comes out, and instead of panicking, investors bet that this will force the Federal Reserve to step in and cut interest rates to help out. And that hope of cheaper money sends the stock market rallying. It's totally counterintuitive, right? And here's a perfect example of that in action. The Consumer Expectations Index, basically how people feel about the economy's future, dropped to 63.2. Now, historically, any reading below 80 is a huge recession warning sign. But in today's weird market, this bad news has actually fueled rallies because it just reinforces that belief that a rate cut has got to be coming. And this right here is the heart of the paradox. The incredible success of companies like Dell is a total double-edged sword. On one hand, it's amazing for Dell and its investors. But on the other, it just makes the market even more dependent on a few tech giants. It reinforces the exact concentration risk that regulators like the ECB are screaming about. So where does that leave us? Well, we're basically stuck in this state of unresolved tension as we head toward the end of the year.
The market's being pulled in two completely different directions, and frankly, it's anyone's guess which side is going to win.
Looking ahead, a few key things are going to decide where we go from here. First, you've got holiday trading. Volume gets low around Thanksgiving, which can lead to some really sharp, unexpected price swings. Then, of course, everyone is hanging on every single word from the Fed about interest rates. And this is the big one, AI sentiment. If the AI hype train ever slows down, or if adoption doesn't meet these sky-high expectations, this whole rally could reverse fast. So we're left with this one final, massive question. Is this incredible AI-driven rally building the foundation for a new, stronger economy? Or is it just creating a fragile house of cards where the failure of just one or two key companies could bring the whole thing crashing down? That is the question hanging over all of our heads right now.
We really hope this breakdown helped make sense of all these conflicting signals. What do you think is going on? Your feedback really helps us make these explainers better. So let us know your thoughts. Like, share, and drop a comment below. Thanks for tuning in.